Here are 5 steps for beginners to start investing in 2023. Step 1. To begin your journey, first you must consider, what is investing? Investing means that you invest in something such as the stock of a company. This means that you buy it at a certain price, and you expect that price to increase in value over time. Similarly, if you would invest into an index fund, you would expect the value of that initial investment to grow over time. You must also consider what kind of investor you are. Do you want to take more risk, with the chance of a higher profit but also the risk of a higher loss in return? Or do you want to play it safe and expect more moderate profits, but also a lower chance of your investment losing value over time? All in all, by considering these questions, you are coming up with an investment plan or a strategy that will guide your approach to investing. Step 2. Educate yourself. Recommended reading are the following books: The Intelligent Investor by Benjamin Graham, Rich Dad, Poor Dad by Robert Kiyosaki, The Total Money Makeover by Dave Ramsey. Step 3. Open an account for investing with a provider. This will depend on the country that you live in. Common choices are your local bank, Fidelity, Vanguard, and eToro. Look into the fees that these options would charge for their use, and then decide which one is best for you. Step 4. Choose your investments according to your investment strategy. For higher risk, choose stocks of companies that you know the business of. For a lower risk, choose index funds such as the S&P 500 and other index funds in other geographical areas, or ETFs. Step 5. Monitor your portfolio and keep learning through relevant books and other resources. You can also branch out into real estate or other forms of investing.